Well, this morning things are looking very good. Let's not forget that the Nifty is just 1% away from lifetime highs, and the Nifty has actually pulled in a good amount of weight. I mean, from the 9th May lows, the Nifty is up almost 650 points, and this morning lots of positives to talk about. So let's get straight to it. Our research team is standing by with the list of top 10 stocks. First up, Vivek is joining in to tell us about Power Grid. Vivek, good morning.
Well, good morning. So Power Grid is on the radar. When you're looking at the numbers, overall it's a slight miss against what the analyst was expecting, what our poll was also indicating, and the consensus estimates. So expect some profit booking today, and the stock has done quite well. So first up, when you're talking about the revenues down by almost 2.5%, coming in at the 11,050 crore mark. Now, when you're talking about the EBITDA is down almost 9% on a year-on-year basis, and it has come in at close to 9,142. Now, the expectations were actually quite high. When you're comparing it to our poll, Antique estimate had an expectation of close to 9,500 crore. So it has missed even the lowest end of the expectation as far as the EBITDA is concerned. EBITDA margins has come in at 82.7% versus 88.9% on a year-on-year basis. Again, quite significant contraction as far as margins are concerned. Net profit down by almost 2.1%. Now, from the financials yesterday, the calculated capex has come in at close to 12,500 crores. So that's a strong number. So that's a positive. And commissioning for FY24 was close to 7,620 crore. Now, talking about FY24, Power Grid actually won quite a few TBCB projects, almost 10 TBCB projects. Estimated cost of all of these projects put together is close to 26,900 crore. Telecom revenues aided up 20%, but consultancy revenues this time around was down 56%. Expect some profit booking today.
Okay, all right, Vivek. Thanks a lot for that. Well, let's hop across to Ekta. Sun Pharma came out with its set of numbers in the final hour of trade. The stock saw a bit of a spike up, but Ekta's tuned in to the con call details. Ekta, tell us more.
Well, yes, the conference call for Sun Pharma took place post-markets yesterday. The guidance was a little disappointing according to analysts. So the management has said FY25, they expect high single-digit consolidated top-line growth. All businesses are positioned for growth. The ramp-up of the global specialty business should continue. They see a strong quarter for Winlevi, which is basically one of their specialty products. And they expect a pickup in Illumia as well. But they do expect R&D to be higher at around 8 to 10% of sales. And there was no guidance on the EBITDA as well. So I think that would probably weigh a little bit on the street. And in FY25, the company does plan to launch their specialty drug for alopecia. So I think that would be closely watched. They're working towards GLP-1 drugs. Supplies from Mohali have restarted slowly, and they have undertaken enough correction for various audits or US FDA issues that they're facing. CLSA downgraded the stock to underperform. Target price is 1610 due to limited upside and lack of near-term triggers. Nomura is neutral. They say Q4 and FY25 guidance is below estimates. Jefferies has raised the target price, but they expect a subdued FY25 and growth to rebound from FY26 onwards. So I expect the stock to probably be in the red today.
All right. Ekta, thanks very much for that. So keep an eye out on Sun as markets open. But Jubilant FoodWorks is the next one, which also reported numbers. Mangalam is here with details on this one. Mangalam, morning.
Good morning. So if you look at Jubilant FoodWorks reported numbers, you would see a huge spike, but that spike is largely because of the consolidation of the DP Eurasia business that came into the company's fold from February 1. India business largely in line with expectations, but the net profit was boosted by a 170 crore exceptional gain. So let's take all of this individually. Overall revenues grew around 24%, close to 1572 crores. EBITDA grew around 25%. The margins improved a little bit, but that's because DP Eurasia margins are better than the company's own margins, and the net profit came in higher by about 600% again because of the 170 crore exceptional that we're talking about. In India, the revenue came in at 1330 crores. The street was working with a number of 1327 crores. Margins, while they were slightly better than expectations, they were near record low for the company. That's because they've cut off the delivery fee, the delivery charge that they would have, and also offered some low-priced variants as well. They've added 67 new Domino stores. The street was working with a range of 60-65. But the most important part, the like-for-like growth has now turned positive, 0.1% versus street expectations of 0 to -3%, and turned positive for the first time in the last 4 quarters itself. In fact, not just that, if you take a look at the entire industry, which has reported numbers so far, Jubilant FoodWorks' 0.1% LFL growth is a lot better than KFC India, Pizza Hut India, as well as Westlife Food. So see some green on the stock. Let's see where it goes from there.
Okay, you've gotten all of us hungry now. Thanks, Mangalam, for that. But let's go across to Vivek to talk about Torrent Power. Vivek, good morning.
Well, good morning. Again, slight miss when you're seeing Torrent Power as well. Slight miss against what the consensus was anticipating. So revenues higher by almost 8.5% on a year-on-year basis, coming in close to the 6,530 crore mark. EBITDA higher by almost 1.7%, 1,109, and this seems to be quite a big miss against what the consensus was anticipating. The company has gone ahead and given a few reasons. We'll come to that as well. EBITDA margins coming in at 17% versus 18.1%, again a miss of close to 110 basis points. Profitability optically much lower, down 7.6%. But remember, the base quarter had a net gain of sale of LNG, and this is something on back of which you're seeing the profitability lower by close to 8%. Now, what is it that the company is saying? The company is saying the profitability was largely aided by contribution from merchant power sales. Now remember, in the conference call, the company said that in the last 10 days, the company has gone ahead and started selling gas from the gas-based power from gas-based power plants in the market, and this is under Section 11. So the prices over there will be capped. Now, apart from that, the company has also said increase in contribution from thermal generation segment, from better offtake, from long-term offtakes. Again, this is something that the company has said is a positive. However, higher tax expenses is something that the company has alluded to, saying that it impacted the PAT. Now, going ahead, FY25 capex guidance at close to 2,000 crore, out of which 1,750 crore is in the license business and 250 crore in the franchise distribution area. Company has also taken an enabling provision to raise up to 5,000 crore. Expect some profit booking in Torrent Power as well today.
Okay, thanks a lot. So some profit taking on Torrent Power. But going back to Mangalam, he's to tell us about Nykaa as well as Metro Brands. Mangalam.
Well, if Jubilant FoodWorks got you all hungry, then this may want you all to indulge in some retail therapy as well, because Nykaa, good performance as directed by the company in their fourth quarter update. A 28% revenue growth, EBITDA grew about 32%, so there was operating leverage playing out there. And the net profit jumped nearly 300% on a low base. 2.5 crores turned into 9 crores for the company. Internally, the gross merchandise value was up by about 32%. Beauty grew by about 30%. Fashion grew by 27%. And others, which includes men's grooming as well as some of their B2B verticals, that has grown by 68%. The only fly in the ointment was that the beauty and personal care business margins, contribution margins, declined year on year. And that is something which one needs to watch out for from the future standpoint as well, because of competitive activity. So opens in the green, but may see some sell-off. For Metro Brands, the situation has been weak for the footwear industry this year. In that as well, they grew about 7% with a 10% growth in their EBITDA. There was improvement in the margins. Net profit here for them was aided by a tax credit of 50 crores versus an expense of 26 crores. They've added 21 new stores in the quarter. They will open 225 new stores in FY26. And Fila EBITDA losses are narrowing. They are down by about 11 crores. Growing that would be extremely crucial to track.
Right, Mangalam, thanks very much for that. So we have by the way, Metro will be in focus as well. Petronet LNG is the next one that we're going to focus on. Sonal is here with the details on the numbers from Petronet. Sonal, morning.
Good morning, Prashant. Well, sequentially, the numbers were a decline, and this despite the fact that spot LNG prices were lower, which would have meant that volumes and utilization would have been higher. The company has not given any details yet on the volumes and utilization across their ports as well. But going for the numbers, revenues were down 6.5%, EBITDA down 35%, margins contracted 360 basis points, leading to a profit decline of 38%. The company also says that in FY24, their trade receivables included 1,832 crore rupees as use or pay charges. So if any client is not able to use a defined volume, then they'll have to pay charges for that. And net of provision, that is around 1,474 crore rupees. This is when the capacity utilization is lower than what was expected. These dues pertain to last 3 financial years, but the customers have not given balance confirmation towards use or pay dues. So we'll need more clarity on that. What is the receivable here, and also in terms of volumes and the utilization. But going by the PNL, it was a miss this time around.
Okay, thanks for that. In fact, we have the management of Petronet LNG joining us at 9:30 today. So do stay tuned in for that. But Gland Pharma is also on our radar. Ekta is here to tell us why. Ekta, over to you.
Well, it's going to react to its Q4 numbers. Now, interestingly, Gland Pharma, the numbers, if you look at it and you didn't have an estimate, it looked very good. But compared to its estimates, it sort of came in below that. So revenue was at around 1,537 crores. The street was anticipating 1,616 crores, which is a growth of over 100% year on year. Margins 23.3%. There were some estimates going up to 24 to 25%, but it's an improvement on a year-on-year basis. And the profit at around 149.6 108 crores versus estimates of over 200 odd crores. Now, USA, what stood out is that there was a sequential improvement. So it was up 7% Q on Q. Their other core markets, which is Canada, Australia, and New Zealand, saw Q4 growth of 58% year on year and 51% Q on Q, which was good. India was, however, sluggish, so it was down year on year and Q on Q. Now, some of the key things which will weigh on Gland Pharma is Cenexi, which is one of their recent acquisitions. The revenue was down 18% Q on Q. There was an EBITDA loss which widened as well, and the management says there's no near-term pickup in Cenexi as well. The legacy business revenue run rate, however, improved Q on Q, and their recently launched drug, Halavan generic, should probably aid Gland Pharma. So that could probably assuage a little concern. And the base business for Cenexi, just to give some numbers, was up 50% year on year. The China market progress has been slow, so maybe that would probably also weigh on the street. Expect the Cenexi acquisition to probably be the key reason why Gland Pharma would be in the red today.
Okay, all right. Ekta, thanks for that. Well, I'm looking at Ramco Cements and I expect the stock to react positively. Even if it opens up in the end, I'm expecting it to recover from the low point of the day. And here's the rationale. If you look at the numbers, the top line was better because they sold a high amount of volumes. The problem was realizations contracted by close to 8% on a sequential basis. But top line, no worries on that front. The absolute EBITDA number as well came bang in line because there's a beat on the top line, which came down further to the EBITDA number. However, on the margin front, there's a small miss out there. So that's why you did have the EBITDA per ton coming in at sub 800 rupees per ton. But I think that's par for the course. The company is taking measures with regard to the green power focus. They have scaled that up to close to around 34%, or they're talking about it going to 42% in the coming year. So high use of green power is helping them in terms of the power and fuel costs. The other positives are the net debt number has come down by close to around 100 crores, which is a positive. And the second factor is, earlier they were talking about a capex plan of 1,700 crores for FY25. Now they pulled back a little bit to around 1,200 crores. Or the street will take this positively. And because of all of this, I expect the stock to open up in the green. Keep in mind, last 1 year, the stock has moved nowhere. In fact, it briefly went to around 1,000 rupees and came off from there. So we'll keep an eye out on Ramco Cements. But Upasana is joining in to tell us about Garden Reach. Morning, Upasana. Tell us more.
Strong set of numbers reported by the company, revenue and PAT reaching new highs. Now coming to company's Q4 performance, the revenue has seen a growth of 69% on a year-on-year basis. Margins have expanded sharply from 3.4% to 8.9%, and PAT stood at 112 crores versus 55 crores on a Y&Y basis. Now coming to company's yearly performance on FY24 basis, the revenue has seen a growth of 40% and margins have expanded sharply, that is 70 basis points, and stood at 6.5%. Now, company says that it is confident of growth in coming years that is backed by the strong order book that the company is witnessing, and it has also highlighted that the ongoing projects are at a maximum revenue recognition phase. More orders are also in the anvil in the upcoming years, is what the company has said. So, all in all, we are seeing a strong set of numbers coming in from GRSC.
Okay, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: Jubilant FoodWorks, Nykaa, Metro Brands, Ramco Cements, Garden Reach Shipbuilders. While stocks with negative news flow: Power Grid, Sun Pharma, Torrent Power, Petronet LNG, and Gland Pharma. Manisha Gupta is joining in now for a roundup of all the action from the commodity markets overnight. Manisha, hi, good morning.
Hi, good morning, and thank you for that, Sonia. Well, I'm looking at a profit-taking board when it comes to commodities. I'll start with the crude oil prices, where we have seen a decline on surprise rise in the U.S. inventories. Now, the markets are waiting for the OPEC and allies meeting that is on 1st of June. So ahead of that, there's going to be some choppiness into the markets. But it's all about the U.S. Fed minutes, which says that there's not enough push for rate cuts given the current inflation backdrop, and that has led to a much-needed profit-taking, perhaps, in case of commodities. So we've seen gold prices decline 2% overnight. Silver fell 3%. In the metals as a sector, we've seen copper prices decline by more than 4%. Zinc and aluminum have declined 1.5% to 2% as well in the overnight markets. There is also some strength in the dollar index overnight, and that seems to be weighing on. So as far as commodities go, well, today in Asia, it's profit-taking across board.
Okay, all right, Manisha, thanks very much for that. We'll come back with more as we go along. We'll take a break here. Deepan Mehta of Elixir Equities will be with us in just a bit from now. Stay tuned, that conversation will sort of shine the spotlight on lots of stocks which are moving and which will move on the back of earnings. Stay with us.